Welcome to Friday Takeaway. This week, I look at two counters belonging to Malaysian billionaires. One is speculated to be in the running for a massive infrastructure job worth billions. The other is creaking with that, also unfortunately, to the tune of billions. But we start with Sri Lanka, where at least 359 people died in a coordinated series of bomb attacks targeting churches and hotels. The country remains in chaos and disarray, with hundreds of Muslim refugees fleeing Negombo on its west coast due to communal tensions in the wake of the bombing. Merger talks between Deutsche Bank and Commerzbank have collapsed, with integration risks, implementation costs, and capital requirements making the deal too complex to complete. There's also been huge opposition from powerful labour unions unwilling to stomach the 30,000 or so in expected job losses. Formal merger talks were well into their sixth week until the collapse this week, with talks strongly encouraged by Germany's government seeking to not only forge a bigger, stronger domestic bank to compete against big American lenders, but also to offload some of their legacy shares in Commerzbank. On the home front, some good news. The World Bank has forecast that Malaysia will grow 4.7% this year, same forecast as the IMF and higher than Bloomberg's 4.5%, Moody's 4.4%, and Bank Negara's range of between 4.3 and 4.8%. The growth will be driven by private consumption and more money in lower income households with initiatives like the B40 Health Protection Fund, the B40 Insurance Scheme, and affordable housing, although the US-China trade war and high levels of government debt remain concerns. In this week's This or That, I look at two counters controlled by famous Malaysian billionaires. The first is Tycoon Tan Sri Lim Kang Hu, often referred to as Helicopter Man by Johor locals because he frequently commutes between his office in KL and Iskandar, Malaysia by chopper. Tan Sri Lim is estimated by Forbes to be worth over $1 billion, thanks to his stakes in property, construction, palm oil and infrastructure companies, in companies like Iskandar Waterfront Holdings, PLS, Nasford and Tebara Tegum. But specifically this week, I look at Ekovest, his infrastructure and construction outfit. The other tycoon is T. Anandakrishnan, estimated by Forbes to be worth over $7 billion, thanks to his shares in Astro, Measat, Maxis, Aircel and Tanjong. For AK specifically, this week, it's about his oilfield service company, Bumi Armada. So let's find out more. Ekovest is tightly controlled by Tan Sri Lim Kang Hu and is a civil engineering and building works company with projects that include Danga Bay, KL Central, Labuan Financial Park, Petronas Carigali, Petronas Twin Towers, Putrajaya and University Malaysia Sabah. Their property development projects include Eco Titiwangsa, Eco Cheras and Oasis Kajang. Plus, they also own infrastructure concessions like Duke Highway and solar panel at Batu Toll Plaza. Ekovest shares have doubled in 1 week after the government reinstated the 140 billion ringgit 483-acre Bandar Malaysia project. And that's a project which originally involved another Tan Sri Lim Kang Hu company, Iskandar Waterfront Holdings. The market is basically speculating that with Bandar Malaysia back on and Ekovest situated both operationally and geographically in the same area, it will be involved one way or another, despite both Ekovest and Iskandar Waterfront issuing a denial this week that they are part of the deal. The big picture, that Ekovest could be the next Gamuda. Ekovest is still heavily in debt to the tune of 6.4 billion ringgit, only partially reduced by its private placement that will only raise a maximum 203 million ringgit. Plus, their earnings remain uncertain as its other business segments, property and highway concessions, aren't all that clear. The property sector remains in a slump and consistent revenue, mainly from Eco Cheras Mall, is still uncertain, hence the placement. As for highways, its Setiawangsa Pantai Expressway, SBE aka Duke 3, will soon be completed and add to cash flow with Duke 1 and Duke 2. But cash flow is one thing and profitability is another. Plus, the government is also looking at taking over Malaysian highways, and that's another uncertainty. Only one analyst covers Ekovest according to Bursa Marketplace, and that recommendation is a hold. That analyst has a target price of 77 cents, which means that with the stock having already rallied this strongly, there's a potential 21% loss if you buy now. But which picture do you look at, the current situation or the speculatively bright one? Founded in 1995 and part of billionaire Anandakrishnan's Usaha Tegas Group, Armada is an oilfield services company and the world's number 5 largest floating production, storage and offloading FPSO provider with 6 vessels. Based here in KL, it operates in Southeast Asia, South Asia, Central Africa, South America, Australia and the Caspian Sea region. Bumi Armada's main challenge are its high debts. amounting to 10.4 billion ringgit at the end of last year. That's nearly 3 times its asset size. The fact that it swung to a net loss of 2.3 billion ringgit in 2018 from net income of 352 million ringgit a year earlier reflects its challenges in terms of funding operations and keeping the business afloat. As a result, Armada has said it plans to sell assets, cut costs, and pursue unpaid receivables from customers. Management have succeeded in refinancing and restructuring $660 million of debt, which had been due almost immediately. But their bank interest is now a massive 7% per year, which means they need to monetize their assets pronto to repay borrowings. In the first 2 years of this new loan, Armada has to repay $210 million a year in principal repayments, followed by another $80 million per annum between year 3 and year 5. A pending lawsuit against Woodside of Australia might bring in some money, but most of it will have to come from selling their vessels, getting surplus funds from operations, and winning new project financing, all of which are uncertain and a threat to its ongoing financial viability. Of the 15 analysts who cover Armada according to Bursa Marketplace, none are a strong buy, 2 are a buy, 7 are a hold, 4 reduce, 2 a sell, and with a consensus target price of 26 cents, Armada is more than fully valued.